In today's discussion, we'll focus on SoFi, exploring recent developments and data points that influenced its movement. We'll also review other key aspects that you need to know. So let's dive straight into it. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi recently closed slightly lower, down by 1.51%, though it showed slight improvement after hours. However, today's overall market performance was fairly negative due to various factors. Some of these included last-minute nerves around upcoming elections and broader geopolitical tensions that stirred uncertainty among investors. Despite this, SoFi managed to both open and close relatively strong, reflecting resilience amid wider market turbulence. Moving on, there's an important date to keep in mind. SoFi's upcoming earnings report is just around the corner. After today, only 3 more trading days remain before the company reveals its financial results. Analysts haven't made any substantial adjustments recently, so expectations for revenue remain at around $633.88 million, with earnings per share estimated to hover around 4/4. While these figures are still in line with earlier predictions, there's anticipation that the earnings report will be promising. Even though there have been no significant SEC filings or news directly related to SoFi, we can examine some of the institutional activity. Today, the trading volume stood at 37.7 million shares, slightly below the average of 44.7 million. Large transactions above $100,000 took place in the secondary market, and there was considerable activity after hours, signaling ongoing interest in the stock. The final major transaction for the day saw 10.4 million shares being traded. Institutional buyers and sellers have shown mixed actions, but the high frequency of transactions highlights that SoFi remains on the radar of big investors. Although there wasn't any groundbreaking news to report about SoFi today, I wanted to draw your attention to something interesting. A post from an average dip buyer who mentioned that for every like the post received, they would buy a share of SoFi. It's a fun way to drive some buying momentum. So if you're a fan of SoFi, consider popping over to their post and giving it a like. The post is already at 121 likes, and there's a goal to push it over 1,000. It's an easy way to contribute to buying pressure and support someone in the process. Moving on to the short interest, short sellers increased their positions by 330,000 shares today. Currently, 16.23% of SoFi's free float is being shorted with a cost-to-borrow average of 0.61%. Utilization is at 30.36% and the short score stands at 63.72. Over the last couple of days, there has been a slight increase in short activity, marking a deviation from recent trends where shorts were consistently closing their positions. The reasons behind this shift are unclear, but what's evident is that there are still plenty of available shares for short sellers to capitalize on if they feel that SoFi is overvalued. Looking at options activity today, there were 14 million in calls and 4.62 million in puts, with 48% of the options leaning bearish, suggesting that some are anticipating a potential downside. Despite this, between 12:15 and 12:20, we saw some very bullish activity with $516,000 in premiums. This isn't likely retail activity. It's more probable that institutional investors are positioning themselves ahead of SoFi's earnings, perhaps anticipating a strong report. The consensus for SoFi's stock price based on today's call options indicates expectations for it to rise above $11, with some even targeting $12 or $13 in the longer term, specifically by 2025. On the flip side, puts suggest some investors are anticipating a price below 9.50 cents by next week. Current open interest shows significant levels at $10, $10.50, and $11, with 9,000, 21,000, and 26,000 contracts respectively. While these figures indicate areas of interest, they aren't strong enough to imply that short sellers are heavily determined to drive the stock down. There's also been some indirect momentum in SoFi's favor due to Tesla's recent earnings report, which exceeded expectations. While there's no direct correlation between Tesla and SoFi, positive news from prominent companies like Tesla can sometimes fuel broader market optimism, particularly in growth stocks like SoFi. As a result, there's a chance this momentum could help SoFi end the week on a strong note. Currently, SoFi's after-hours price is 10.44 cents, sitting right on a key pivot point. Tomorrow, the critical level to watch will be whether the stock closes above or below this figure. Support lies at 10.02 cents, followed by 9.59, although the stock may not necessarily reach those lower levels. On the upside, the next key resistance levels are $10.70 and $11.13, which could serve as future targets if SoFi maintains its current trajectory. Although SoFi faced a slight pullback today, it remains in a strong technical position, continuing to hover above important averages. It did dip below certain thresholds briefly, but it's still above the 5-day moving average, which is often referred to as the FOMO, fear of missing out, indicator. Despite being technically overbought, which could lead to some consolidation in the near future, the stock still looks healthy overall. Looking forward, no new analyst ratings have been issued, and it's unlikely we'll see any significant updates before SoFi's earnings report. Typically, analyst ratings and updates flood in after a company's earnings release, so we can expect to see more action on that front soon. For now, there's nothing out of the ordinary in terms of ratings activity. Lastly, I wanted to address a question from a previous video regarding short sellers' average holding duration. Based on recent data, the average short position is held for about 49.91 days, or approximately 2 months in business days. This shows that short sellers are willing to stay in their positions for a significant period, reflecting a level of conviction in their strategy. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.